In this video, we are going to be analysing Carnival Cruise Line's ticker CCL. So to get straight into it, we're going to cover the main analysis. So right now we are in a bit more of overbought territory to quickly show you what that means. And again, we're not going to be doing the analysis on this chart because it can be more confusing. But if you can see this line here, this dashed line here, and this dashed line here, if we're above this, we're usually considered more overbought. If we're below it, we're more oversold. Considering we're coming up about to our second deviation, so again, these are all deviations: first deviation, second deviation, third deviation. Considering coming near to that second deviation, it just means that we're more overbought. So whether if you're a reversal trader or a trend trader, you're going to look at these levels differently. As a trend trader, these are most likely going to be used as targets. The resistance is going to be used as targets. If you're a reversal trader, obviously we're looking to play back down to that fair value. So right now we're sitting at $13.10 at the close of Friday. Now you can see we have a blue line here and a blue line here. This dashed line is the second deviation on a 6 month. This blue line on the downside, the solid one, is the 1 year second deviation. So right now this is our key range. Again, what we can't really do is predict kind of movement from where we are now. So what we kind of have to do is let it play out a tiny bit. So we have to either let it break down to the 1285 and retest it, and by that I mean break below it, come back to retest it as a resistance. If that level holds, then we are most likely going to continue downwards and we would have a target of 1250. On the other hand, if we break to the upside, again, I won't be trading within this range. I'm going to have to wait for a reaction once we come out of the range. The first time we hit this 1370, if you're a reversal trader, probably looking to play that pullback. If not, potentially an overall reversal. Now, again, we can look to play that pullback as a reversal trader or a pullback trader. Then if it goes back to retest this level, what's most likely to happen if we retest the levels, we're likely to break it. So then we would want to see it break above, retest it as a support again. Then if the 1370 can hold, our target goes to $14. Now, this is where the targets get key, because you can see we got the green deviation at $14, and we also have another one at $15.10. These are the third deviations. If you have any understanding of standard deviations, you know the third deviation is really the furthest you tend to go out, because 99.7% of data trades within their third deviations, or 99.7% of the data should be within that data. So if we know that this is the range, and we know then that only 0.3% of data should trade above it, we know that then the rest of this data should all trade below it. So again, really high probability for a reversal. If you're a trend trader, that will usually be our final target to the upside, and then we're only really looking at its short bias. So if we continue up, again, the key three resistances: $13.70, $14.05, and $15.10. All the ones that I'd be paying attention to if we continue to the upside. Now, again, to continue on the downside information, again, I wouldn't be doing anything until we either retest this 1285 or the 1370, just a note. But if we end up making that move to the downside, again, waiting for a break below that level, coming back to retest it, and then if that $12.85 can hold, then we can look for that downward directional move to $12.50. Again, that's going to be our short bias target. Now, this can also be used if you're a trend trader. That could be a potential buy area, and also that 1250 could be a potential buy area to try and continue on that upward trend. Now, if we broke 1250, then again, same thing, retest it as a resistance. If it holds, looking for that continuation to the downside. 1165 is going to be that target. And then where we basically will end this analysis is coming into the 1110. This dashed line here, this is our statistical mean. This is what is considered fair value on a stock. So this is what we were talking about. If you trade above this level, you're considered overbought. If you're trading below it, you're considered oversold. And considering right now we are above it, that is considered more overbought. And so again, if us as a reversal trader, we're really looking to trade back to that 1110 value, and that would be our absolute kind of final target if we were holding that short bias. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.